Man, I can't keep losing money like that.
Well, call him, Earl.
Bearded trader.
Bearded, this Earl.
What's happening, Earl?
Man, I can't keep losing money like this.
Earl, the only reason why you losing money is because you don't understand what makes a market and how that affects supply and demand.
Go ahead, man. I'm listening.
Look, Earl, a market is made up of three things: buyers, sellers, and transactions. Whenever and wherever two people come together and exchange currency for a product or service, a market's formed. At the end of the day, every resource on this planet is scarce. So how those scarce resources are used in the future, that's the basics of economics.
What does that got to do with me, man? I day trade for a living. I'm not out here mining for gold or oil or cutting down trees. I don't care nothing about them scarce resources.
Okay, so you're a day trader, right? You gotta hunt, dig, and search for stocks, right?
Yes.
Okay, so the scarce resource you're dealing with is the actual shares you buying and selling. The shares are considered scarce resources because there's a limited number of supply.
I can buy as many shares of the company stock as I want. They ain't scarce to me.
Man, based on that account balance, you can't buy too much of nothing. Look, every company that is publicly traded has what is called a float.
Float?
Yeah, float. You never heard of it?
No, I ain't never heard of that. I float on my boat. That's about it.
Oh my goodness. Wow. Okay, Earl, listen, man. Every company that is publicly traded has what you call a float. Now that float is the number of shares on the open market that can be bought or sold each day. Every publicly traded company has an outstanding number of shares. The outstanding number of shares include shares that are restricted, which are generally held by executive director or somebody that works for the company that cannot be sold until a restriction is met. Also, shares that are held by big banks such as B of A, Merrill Lynch, institutional investors, or shares held by the average Joe, just somebody holding 300 shares of a company. Now, when you take the outstanding number of shares minus any shares with a restriction, that gives you the float. Now, that's the number you need to be paying attention to.
Okay, so if a company got 1 million shares outstanding, 600 million are restricted, that means that 400 million that's left, that's considered a float. That's what I can trade every day.
That's it, Earl. You got it, man. The float represents supply. Us traders represents demand. And whenever there's an imbalance, price moves. So the only way to get an imbalance and have a stock move in a large enough range is find companies with low float. You know, you find a company with a billion shares outstanding or a billion float, that company's probably not going to move, or that stock is probably not going to move in a large enough range, you know, while you're in it. So look for companies with low float.
How is that so?
Okay, Earl, pull up GLYC. Okay, you see right here, they have 32 million in float. Let's say they are releasing third quarter earnings after the market, and they're expected to beat them. They also just got news that the FDA approved them for a new cancer treatment drug, as well as their profit year over year has doubled. Would you not want to buy some of these shares?
Yeah, I'll buy some of them. So as a trader, you're telling me I need to look for companies that's between $20 and $5.
Yeah.
And they got a float between 5 million and 100 million.
Sure.
They got a catalyst such as FDA approval, product launch, or even some earnings coming out.
That'll work.
And they should have a high increase in volume that day, meaning a lot of people are buying them.
That's it, man. Now you got it. Look, that's the basics of trading. All right, let's do this. Open up a chart since the market's still open. We're going to place a trade together and make you some money. All right, Earl, so you got your charts up. Okay, let's this is SPY. Let's trade IMGN. I think they had some news come out and they have a low float, so they may be poised to move higher today. All right, IMGN. Okay, zooming in. There you go. Thank you, Earl. All right, so you got an area of resistance up there. Yesterday's high was 791. And it looks like we hit that high today. Okay, so go ahead and draw a little resistance line up there for me, Earl, so we can see. So we got an area of resistance right there. Okay, now zoom in for me. Great, great, great. All right, today's candle, opening candle, it opened at 770. But this candle is a dragonfly doji candle, Earl. This candle shows you that, hey, sellers couldn't push this market down. Buyers stepped back in and bought it back up. And the very next candle is a bullish candle. So with that bullish candle and the increase in volume, hey, this stock is poised to take off. Do me a favor, Earl, open up your level 2s so we can see how it's moving. All right, now your level 2s show you supply and demand. So you got your buy side, you got your sell side. When you add 2 zeros to any of these numbers, that shows you how many shares are being bought and sold. So when you start to see an imbalance, you will see bigger buyers than you will sellers. That's how you know where this stock is about to go. So we want to see this. We want to see this side start to become larger. We want to see people step in and start to buy this stock up. Now, the setup we're going to wait for is the first green candle to make a new high above this pullback with increased volume. So we want to see a candle close above 780, and we want to see an increase in volume. Let's put a stop at this low. What's this low? 769. All right, we're going to make that our stop, and we're going to make our entry 781 is going to be our entry. So go ahead and draw some lines for me showing the stop. All right, that's going to be a stop. Go ahead and color that yellow for me, Earl, please. Thank you, sir. All right, so that's going to be our stop. So if we're able to enter this trade and it goes against us, then if it hits this line, we're going to stop out completely. We're not going to stay in this trade longer than we need to be if it's going against us. But we're not going to enter the trade until it gets up here to 781. So we want to see a break above this candle, this bearish candle. We want to see a break above this candle with an increased volume. So right now we got volume around 154,000. The highest of today was 288. So as long as we can get above, say 154, between 150 and 160 in volume, then we'll take a long position in this this company right here. We don't care about their fundamentals. We don't care about if it's a sexy company like Apple or Facebook or Snapchat. We just care about price action, Earl. Price tells you where this stock is going to go. Price tells you when you need to get in and when you need to get out. The fundamentals can't tell you that. When you're trading, traders worry about supply and demand, price action. So this stock met our criteria. We needed a stock with low float. It has that. We needed a stock that probably will have a catalyst such as earnings or FDA approval. They got that. They got FDA approval. We need a stock that is poised to move due to volatility, meaning other people see the stock move and start to jump in. As they start to jump in, that's better for us, Earl. As they're jumping in, then hey, we can actually make more money because we're in before they get in. And that's the whole point. They're going to push the stock up even higher. We maintain our position size and we make even more. All right, so it's getting a little weaker right here, Earl. It made a new low, but that's fine. We will maintain that we won't buy this stock unless it gets back above 780. We still have this low of the day, which is 760. So if it has not broken to this low, that means it's making higher lows. A stock that makes higher lows means it's a stock that's going up because the lows are getting higher. They're not getting lower Lows that get lower is it means the stock is actually going down. It's decreasing. So that's fine. You know, if it does not break this low, hey, that's fine. We can still trade it. So you just got to be patient. This is not a race. It's a marathon. You have to be patient. You have to be poised when you're trading. It's going to be a challenge. But in the face of adversity, in the face of any challenge, you have to be brave. Know your plan. Plan your trade. So our trade states we will pull the trigger right here at 781. So go ahead and put a line. Go ahead and put a line right there for me, Earl. All right, so that's our trigger line. Yeah, you about to color it? Yeah, that's good. Go ahead and change the color on it. All right, so that's our trigger line. We know you got an area of resistance up there at 791. That's fine because between 791 and 781 is 10 cents. Hey, you can make great money, you know, in between that 10 cents if you got the right position size. How much is this stock? This stock is trading at 781. Okay, so get ready to buy 2,000 shares. Go ahead and open up your active trader and put that in there for me. All right, so 2,000 shares. We want to get ready to buy if it crosses 781, right? Okay, so we know we just made a higher low. We just got one low right here, one low right there. They're getting higher. Go ahead and draw you some support lines. So one right there, one right there. Great, great. This actually looks like it may be a great setup, Earl, because if we can get a candle with some high volume, you know, we can get this volume to increase on one of these next candles. Hey, that's better for us, man. You know, that's great for us. And our first target is 791. So this is your first target area. At 791, you want to sell a quarter of your position, so roughly 500 shares. You want to be selling at 791 when it gets up there. You know, we got our stop right here at 769, and we got some support below us. So all we need is this volume to increase. This volume starts to pick up. Hey, we're good. You know, we're not going to enter the trade unless we get an increase in volume. Got to get that first, Earl. It has to meet our criteria. Increase in volume, a break above the previous high. That's our criteria. Increase in volume and a break above the previous high. Here's the previous high. Our volume's down here, right here. We need volume to increase. At least, you know, 150,000. That'd be great. All right, it's pushing up there. It's pushing just a little bit. Be patient. You know, don't jump in until it actually does what we need it to do. You're not the only one watching this stock right now. There's thousands and thousands of other people who are watching this stock waiting for the same setup you're waiting for, which is a break to a new high with increased volume. You know, your level twos will tell you who's buying and who's selling. You know, who as this number starts to get bigger, these numbers over here start to get smaller. You know, that's the imbalance you're looking for. Right now, they're pretty much balanced. You know, your buyers and sellers are pretty much balanced right now. But as soon as we get that imbalance, we want to pull the trigger. We don't want to hesitate. Don't be nervous. Don't be scared. Don't be fearful, because there's no need. You have a plan in place. Your plan dictates your action. Your plan dictates your action. Remember that. Trade your plan and plan your trade. Then you'll be successful. All right, Earl, zoom it in a little bit for us. There we go. Well, actually, yeah, fix it with the. All right. So it looks like, Earl, we may be about to pop up there. All right, that's great. Okay, get ready. Go ahead and put your finger on that buy button, because as soon as it hits 781, we want to be buying. As soon as it hits 781, be buying. Look down there at your level 2s. You got 779 and 778, so this is a tight traded stock. The bid and ask is very tight. 780, 779. As soon as we get that 781, go ahead and pull the trigger. All right. And here we go. 780. 781. Great job, Earl. So they filled you at 782, which is not that bad. Go ahead and get ready to sell 500 shares up here at this 791.92 area. And I'm going to show you how to scale out accordingly. All right, so we're going to sell 500 up here at 791. And then we'll move our stop up to break even. Our break even is 782. Our stop is right now is at 770, 769. Okay, it's not bad. 769 is fine. So if it drops back down and hits our stop, okay, we're stopped out. It's okay, we're stopped out. We're not going to hold it till it gets all the way down here, you know. But if it actually goes up, hits our first target, then we'll sell 500 shares and let the other 1,500 ride. So put you a second target at, let me see, first get ready to sell this first 500 shares. And then we'll make a second target around 802. Okay, so yeah, go ahead and get your thing ready. So your second target's gonna be up here. Alright, that's your second target. So we'll sell 500 shares at 791, or 792 to be exact. Let's try to sell them right at 792. And we will sell another, so we're going to take half of that 1,500 that's left. So roughly what, 750 shares? All right, then we'll sell another 750 shares up here at this 802 level. For that'll be a 20-cent gain. So on the first quarter, we gained 10 cents. On the second half piece, we gained 20 cents. On that third piece, we actually gained 30 cents. And then if it drops back down and hit our stop, we'll go ahead and stop out. So be patient, Earl. You know, you're in the driver's seat, which means you know where you want to go. You have the driving directions. You have the plan. You have the GPS. You know, you're not following anybody. You're not riding behind anybody's coattail. You have your own plan in place. You're going to just stick to your plan. Yeah, right now it looks like, okay, we're down, 5, 6, 7. We're down 7 cents. So yeah, right now you're down 151 bucks. But, you know, the stock has not hit our stop. We have our stop in place. We got our stop right here. It's 769. So we're fine. Okay. Let's see what this next candle does. See if we can get we got a high volume. That's great. Look at that, Earl. That volume spike. 221,000 shares went off. That's great. So we wanted to get a high volume. We got that. That's our first criteria. We wanted it to close or make a new high. It did. Made a new high. So we entered in the trade. That's our plan. You know, so I guarantee you other people entered into this trade. It wasn't just you, Earl. Other people are in this trade with you. And the more people that come in, you know, the more volume that it gets, the higher this the higher this stock would go up, which is fine. We have our 2,000 shares already in there. We're not going to worry about adding to the position right now. You and I can talk about that later. Right now, I just want you to see on how you enter and how you exit a trade. And you do that by having a clear trading plan in place. So get ready to sell that first 500 share size when it gets up there to your price, $7.91. So we're going to scale out by selling a quarter. We're going to scale out by selling a half. And then we'll sell another quarter and see what happens after that. This is the patience game, Earl. You can't rush the process. You got to go through the process. You have to go through the process. And if you look closely within this chart, Earl, is almost this is like a U-shaped bottom. If you draw a circle from there to there, you get your U shape. Get ready to sell your first 500. So take a look at your level 2s. So when this ask gets to 791, you want to be selling. And this is called locking in profit. So we're going to sell sell a quarter of our position, move our stop up to break even, and that's locking in profits. So if it does push back down, we've already made money. We're not too concerned about it. So 791, go ahead and sell. All right. So move your stop up to break even. All right. So we got our stop. What is this line? This was our trigger line. These should be the same, Earl. 782. So move this out the way. Okay, yeah, move that. So this is your new stop, 782. If it pushes back down to 782, we're stopped out. We will go ahead and lock in. We'll lock in some money. But our next price is 802. So if it gets up to that 802, we want to sell 750 shares. All right. So go ahead and change that. You see, we have 1,500 left on the table. So if it gets up to that, that 802 level, go ahead and sell out 750 shares, and then see what happens next. You don't have to hold all these shares as it's going up. Scale out as it's going up. You scale out, you're locking in profit. Take profit off the table. The longer you leave profit on the table, somebody else is coming to get it. So, get what's rightfully yours when you can. Get ready, Earl. At 802, you want to be selling that 750. So if this actually pulls back and hits our stop, hey, we live with that. We can live with that because we made 10 cents on 500 shares. That's not bad. You take the little $50, I'll take it. Because actually, you've only been in a trade, 5, 10, 15 minutes. To make $50 in 15 minutes. Some people don't even make, $50 in a day. And to make it in 15 minutes, man, that's phenomenal. All right, so buyer step back in on this candle. We got a bottom tail doji. So they may push this higher. Look at your level 2s, what your level 2's telling you. You got 600 shares being bought, 600 shares being sold. So that's a roughly equal. Buyers and sellers are equal right now. And we're waiting for an imbalance. When buyers actually start to buy up more than what people are selling. That's the imbalance we're looking for. You have an increase in volume. Volume has gotten higher and higher, which is great. That's what we want to see. Volume continually to go up. It means other people are watching this stock. Other people are paying it attention. The more people that pay it attention, the more volume will continue to flow. The more shares will be bought and sold. The more liquid, IMGM becomes. Easy to get in, easy to get out. This is basic trading right here, Earl. This is trading 101. It's trading using supply and demand. It doesn't take all these different technical graphs and indicators and MACDs and stochastics and back testing ratios and all this stuff. No, let's stick to the basics. The basics are the footprints. Footprints show you where something has been. And that's all we need to know. We need to know where it's been. Like, we can't tell you where it's going to go, but I can tell you where this stock has been. It's been down here. It found some support, and now it's going up. That's it. It's basics. Keep your trading simple. When you keep your trading simple, you move out all the outside noise, and you focus on price action. Don't worry about what CNBC is telling you. Don't worry about what Jim Cramer's telling you, or Squawk Box, or Think Tank, or Morning Joe, or all these other companies out there. They're great at what they do, or I'm not telling you that they're not great at what they do. They're great at what they do. But when you're trading, it's only you and that stock. Either you gonna win or that stock's gonna win. And that's the mentality you have to have when you're trading. Focus in on what you're doing. Focus in on your plan, and let your plan work for you. Now, even if the stock goes against you, your plan already tells you, hey, I'm only going to risk, what was it, $2,200. We were only going to risk $200 on this trade, based off where the stop was. So if we're only going to risk 200, then, if it goes in our direction, we should make at least $350, $400. Cool. That's not a bad day's work, in my opinion, Earl. To be able to make $400 in an hour, and you can do that on a consistent basis, then you become a true trader, a true retail trader. All you have to do is confront the challenge boldly, come face to face with adversity, and beat adversity. Don't let adversity scare you from the market. Be bold with your trading. Stick to your plan. Stick to the setups that work best for you. But right now, you're doing great, Earl. You're up $190 in 5, 10, 15 minutes. So that's not bad, man. Make $190 in 15 minutes. That's not bad at all. All right, so we may get a little bounce right here. So we have hopefully we'll have an area of support right here, and then we get a bounce higher. If not, it'll drop lower and we'll be stopped out. So we got our stop down here at 782. We got our next target. Where's our next target at, Earl? We got our next target at 802, 803 area. And if it hits that, then we will sell 750 shares. All right, looking good, Earl. All right, Earl, take a look at your level 2s. So you're starting to get buyers and sellers in here. You got a Big seller right here, 795. So if that person gets 8 up, that means people are actually buying his shares. Well, it looks like he did. He just got 8 up. So you should get a pop, meaning it's going to more than likely push up, make a new high really quickly. So you're going to be fast when it's time to sell. Okay, Earl, look down there. You got that big 16 down there. So, when you add 2 zeros to that number, that's 1,300 shares are being traded or want to be bought at 797. You got 18 at 796. So volume is actually starting to pick up. People are starting to want to buy or sell this stock, which is great. That's great. That's what we want to see. We want to see big buyers and sellers. We want those numbers to stick out. As those numbers stick out like sore thumbs, we can make educated decisions. Because if we see, if you see a big 300 over here, that's 30,000 shares. All right, we don't want to be buying while somebody's selling that. But as these sellers get bought up, the stock is moving higher. All right, you're about to make a new high. Go ahead and get ready to sell at 802. We at $8. Go ahead and put your order out there. See that big 223 down there and 107? Those are big buyers. That's what we want to see. 219, 214, 106. Those are huge buyers. You got some long wicks right there. See these wicks or bottom tails? That lets you know people are buying this stock up. So you may get a pop real quick. You have to be fast on pulling the trigger to go ahead and sell those 750. And that's good. That's not a problem. We want to see those tails. That's great. That's great for us. Demand is increasing. As demand increases, price has to go up. And when we're in a long position, you want price to increase when you're in a long position. Now if we were short in this stock, that's different. We want the price to go down. So, and it looks like you're about to hit that 802 real quick. See down here, you got these big buyers on your level 2s. That's great. Look, your sellers are very small. That's the imbalance we're looking for. We want to see an imbalance between buyers and sellers. All right. Great trade, great trade. So now what we're going to do, we're going to move our stop up to this low, which is 791. So move your stop up to 791. Okay. And we're going to sell another 500 shares at 8 812. Yep, roughly right there. Go ahead and sell. Get ready to sell at 812. So when you see the bid and ask hit 812, go ahead and press send. All right, so now you have 250 shares left, and what we're going to do is wait for the first doji candle to form. Go ahead and draw you a line right there at 812, showing that sold some at 812. So we sold 500 right there, 812. All right. You see it's pushing higher, pushing higher. That's great. We have 250 shares left. The next candle that forms, that's a doji candle, which is a balance type candle, a candle where buyers and sellers are equal. We will sell 150 shares on that candle, and you need to move your stop up again since you just sold at 812. Move your stop up to 802. So let's move this up to 802. All right. So go ahead and sell 100 at 8. I'm gonna say 150 at 820. Since it's moving up pretty fast, go ahead and sell 150 at 820. If you can get filled or close to it, 818 is fine. All right. So now we have 100 shares left on the table. And what we're looking for now is more than likely you should get a pullback. The next candle to form should pull back and more than likely will stop you out. I would say go ahead and move your stop up to 8. This price where we sold at 500, yep, at 812. Move your stop up to there. All right, good. So now two things we're looking for. If it happens to just fall back down within this candle, we get stopped out, or it may push higher and then roll over and we'll get stopped out. Either way it go, we've locked in a lot of money. We locked in a lot of money on this trade, which is great. So we have 100 shares left out of the 2,000. We initially bought at 782. So, right now you're basically up 40 cents on this last 100. You're up 40 cents on this last 100. So you're doing a great job, Earl. This is some great trading right here. All right, making a new high. Go ahead and sell 50 at that new high. Go ahead and sell 50 shares at that new high. 825. Send. All right, so we got 50 shares left. And if it rolls back over, stops us out, great. If we make another high, such 830, 840, we'll sell again. And that'll be it for this trade. So it's been a great trade, Earl. You had your support down here at 765. We bought your first piece right here at 801. First target was right here at 791. Second target, 802. Third target, 812. We had a fourth target up here at 825. So go ahead and draw your line right there. That was a target. And now this is a doji candle where it will more than likely pull back because this stock has gotten very far extended from this 9-period moving average. So you got all these buyers that stepped in. See how volume just kept going up, going up, going up. Right here, this is close to 500,000 shares went off on this candle alone. So that's a lot of buyers stepping in. A lot of people taking money. Taking money off the table. As they start to take money off the table and supply starts to increase, stock will roll back over. It's simple. Supply and demand. Supply increases, prices fall. Supply decreases, prices rise. So now we're just waiting for this last push higher up to this 830, 840 range, or for it to push lower, hit our stop, and that'll be it for this trade, Earl. You've done a great job, man. There's no reason why you can't do this by yourself. You shown courage in trading. You shown bravery by following your plan and not not being scared or nervous and making a bad decision and getting out early. You scaled out correctly, locked in profits. You taking profits off the table, and that's what you want. You want to be a profit taker. Don't be a profit giver. Don't give up profits. Take profits when you can, and then live with the results. Don't never say, man, I should have stayed in there longer. I could have made XYZ. No, you couldn't have, because maybe the stock wouldn't have done what you actually seeing. That 2020 hindsight thing does not work when you're trading. Follow your plan and trade your plan. Scale out as stocks go up, and bail out when stocks are going in the direction you don't want them to go. All right, Earl, you're making a new high, so go ahead and sell. If it hits 830, go ahead and sell that last piece, those last 50 shares. Roughly that'll be 50-cent gain on 50 shares. So that's cool. We'll take that. So if it hits 830, go ahead and sell those. All right. Good job. Great job, Earl. So you locked in $450. You got in right here at this candle. So 5, 10, 15, 20, 25, 30, 35. 35 minutes, you made $445 in 35 minutes. That's phenomenal, Earl. That is phenomenal. That's a great job, man. Great job. And that's how you trade. That's the basics of trading. Trade with supply and demand mentality. Don't trade off of fundamentals. Look for companies with a low float, companies that have a catalyst, such as FDA approval, earnings, any product launch, so any news that will actually cause a stock to go up or down, and trade those type of stocks. Stocks that are between $3 and $20, they have the most potential to actually move when you want them to move, and you can afford them. You can't trade something you can't afford. You can't afford Google, so you can't trade a Google. Trade what you can afford. So with that said, Earl, great job, man. Proud of you. Keep up the great work.